Thanks so much, Jeanette.
Sure.
Hey, everybody. My name is Ron Haydt. As Jeanette mentioned, I've known her and Hubert for a long time. They're fantastic people. And you might remember, I did a couple events with them over the past 2 weeks. And then I got a ping and it said, hey, are you free Saturday? And I said, absolutely. The response to doing the events recently has been incredible. And I'm greatly appreciative for Jeanette and Hubert. And the response that you guys have written in with. Out of curiosity, was anybody here about 2 weeks ago when I did this similar presentation? Because if you were, that's totally okay. We're going to look at different stocks. In fact, you guys are going to be able to say, you know what? I was here 2-3 weeks ago, and Ron, those stocks you showed us, what do you know? They all moved right as expected. And that's what we're going to talk about today. But before we go any further, I do have to read the disclaimer just for the lawyers. Nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Past performance is no guarantee of future performance. And I think it's Go Tigers. I think Jeanette's an Auburn fan. Anyway, we'll keep going. So what are we going to do today? Well, I am going to show you guys the hottest proven stocks for the weeks ahead. Period. Big old fat period on the end. Now I'm looking in the chat box, just FYI, as I do this presentation, this is all basically by the seat of my pants. It's all live. So we're just going to go in. I have a rough flow of what I want to do, and we're just going to have fun together. So if you have questions as we go, please feel free to ask. Is it Mark Toll and Shapa? Both were here before. So you guys know what I'm talking about. So you ready? You want to see the hottest stocks, bullish and bearish for the weeks ahead? Oh, hey, Dennis in Viva Las Vegas. I know Dennis. All right, this is what we're going to do. We're going to go to our website, financial.com. We can type in any stock ticker. Let's just say we want to type in the SPY. So we'll type in SPY. Now, this is it. 2-click scan. That's all we need to see the hottest stocks for the weeks ahead. We're going to click screen. We're going to click seasonality, and poof, we are done. If I now scroll down, I can show you some of the hottest, in fact, the hottest stocks for the weeks ahead, period. DXCM, Under Armour, Celgene, TPX, Monster, which was in Hubert's video, STE, Herbalife, and HDB. All these stocks have historical track records of moving higher by at least 70% of the time over the next 16 weeks. We're done. Pretty powerful stuff, right? But what does it mean? So here's the deal. What we've done in Financial is we've purchased data. We've run it through our software. We've just compiled every week the stock has been publicly traded, and we're giving it to you. There's no heavier weighting to what happened 10 years ago or what happened just last year. It's the stock's own data. All we've done is served it up on a silver platter. And if you said, okay, can you show me the hottest stocks for the next 16 weeks? They have to rise at least 5% of the time over the next 16 weeks with at least 70% historical accuracy. That's what we've done. And if you said, well, Ron, can we look at stocks that maybe rise over the next 12 weeks? Sure, we can do that too. All of a sudden, F5 Networks pops up, Intuitive Surgical, and there's the monster stock Hubert was talking about this weekend in the video. And then at the very bottom, there's even Expedia. And I can scroll down and we can see even more stocks. And I see there's more folks that are starting to join us. Let me just recap. There's nothing special about how the data is calculated. We've just spent a boatload of money building out the software so any investor can go click, and see the hottest stocks. And it ends right there, period. There's no he said, she said. There's no talking head. My opinion means absolutely nothing. And if I scroll back down, you can see stock, right? You see price, you see the percent increase. Then you can see if it's annualized that, hey, by the way, if a stock rises or a stock lives up to its historical moving average, its historical average by 19% over the next 3 months, that's an 84% return. That's pretty amazing, right? And it does it 70% of the time. But we can even do one better than that. I can click and sort by percent of probability increase. Then we can see Expedia is actually the winner. Now it only goes up by 7% versus F5 goes up by 19%. But guess who wins the battle historically of doing it the most often? Expedia does. Even H&R Block's in here. And Intuitive Surgical, it's not too far down the list. Once again, these 5 columns, it's just data, period. So if you're a scientist, an engineer, someone who just likes the facts jack, you got to be smiling ear to ear right now. That's all this is. The column on the right says rating. That is the only thing on this screen that is proprietary that we've built, aka has human input. What I mean by that is, you could say to me, okay, Ron, well, let's back up a second. These 5 columns, you're telling me that Expedia is going to go up 7.67%. No, I'm not saying that, nor is the data. What the data is telling you is, based on all of the years Expedia has been publicly traded, over the next, let me scoot back up here just to make sure you guys can see it. Over the next 12 weeks, this is what it has done. It shoots higher by 7%. Some years it could be 10, 11, 12. Some years it could be 2, 3, but this is the average, 84% of the time. The data is telling you this. This is the day of the stock waving a big yellow flag saying, hey, pick me, look, 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 listen to what I do. Now the next question you might have is, how can this be possible? You're telling me that if there's companies publicly traded 10, 20, 30, 40 years, there can actually be these types of biases in the marketplace? I'm not telling you that. The data is. Remember, these 5 columns is the stock talking to you. I have nothing to do with it. It's just data. You would think that, if you take like a stock like Disney or Adobe, 20, 30, Disney, 40 plus years being publicly traded, different presidents, right? Republican, Democrat, there's been wars, there's been recessions, debt ceiling, remember that? Now they just keep adding a zero, blank check. Currency valuations, upgrades, downgrades, oh my goodness, product development, right? Technology advancements, yet this is what they do. How does it happen? 2 words, big money. That's all it is. If the big money cares, the stocks will move. If the big money doesn't care, the stocks won't move, which is what makes what you're looking at right now that much more remarkable, that these stocks have these type of moves. You may have heard, and this is called seasonality, you may have heard it called sector rotation, ebbs and flows, whatever it might be. It happens in grains and oil and stocks and ETFs, you name it. Now, it doesn't happen to every stock, but you will be blown away at some of the names you're going to see on these lists at different times of the year. And it just shakes your head saying, how could the market be this easy? I was always told it was completely random. It's not completely random. That's just not true. These biases prove that. The big money will come in and scoop up stocks, sometimes baskets of stocks in the same industry. Sometimes they only do it to one in that industry. And they get in and then they get out later. And here's the beauty of it, which is what we're going to look at here in a second. When the big money comes in, they are so big, they cannot buy their whole position in one day. They can't sell their whole position in one day. Why? When they are trading such large size, they would move the market. One of our partners worked with $1 billion hedge fund. If I can't tell you the fund's name or who the head of it is, because if you did, you would know them instantly. And we had to sign an NDA. The point is, they're completely aware of this because they know they cause it. And you would think, now, wait a minute. If there's $1 billion hedge funds out there, why would they do the same thing? I'm not saying they all do it. All I can tell you is that's the only way these stocks on your screen would do it. If we all got together today and the market was open, unless there's some billionaire traders here, and we all got together, and let's say we wanted to buy Expedia or we wanted to buy Intuitive Surgical, would we even make one block trade on the CNBS ticker? Maybe once, none? Then you have the whole rest of the day. That is going to be our advantage. So when these big funds get in, and this is what creates the ebb and the flow that you're going to see on these charts, they come in, they have to get in over days. When they get out, they have to get out over days, if not weeks and months. Otherwise, they're bidding against themselves, and it causes stocks to spike and crash. All right. So knowing that these 5 columns are all data driven, purely data driven. What's the column on the right? That's the rating, because you could still say to me, Ron, that's fine that all these stocks supposedly have bullish track records. They do. The data is the proof, period. You can't even argue it. This is what they do. But you might say, how do we know that it might work this year? Now, that's a fantastic question, because past performance is no guarantee of future performance. That's the real deal. We have something that we've created called Stock Score at Financial. And what Stock Score is, it's a Stock Score rating. We take into account the one thing we've always been taught. I think I can say always been, or everyone's been taught, that fundamentals matter. Now, I'm going to argue and say fundamentals matter, ... only if the big money cares. Because how many times have you seen stocks have this amazing earnings report, raised guidance, maybe raise the dividend, they get upgrades, and yet the stock crashes? And you sit there scratching your head saying, what does everybody else know that I don't? Because all the positive news out there, the big money was selling into that. It's just what they do. So yes, earnings reports matter, ... only if big money cares. But with that said, you could still say over the long term, fundamentals matter, right? So what stock rating does, it takes into account fundamental analysis, technical analysis, which is the stock's chart. I'm a chart junkie. I love reading charts and candlesticks. Sentiment-based analysis, so those 3, plus seasonality as well. You can actually come in to the advanced filtering and say, you know what, show me stocks that not only from raw data are seasonally bullish this time of year, but also have the fundamentals, the technicals, the chart, the sentiment, and the seasonality going for it too. You put all 4 of those together, you scroll down, the herd has been culled. Because if you scroll back up here and you move this to both, watch what happens. You ready? Watch if I sort by increase. So F5 is still at the top, right? But you come down here and shoe is a sell. UTHR is a sell. EBS is a sell. Kohl's actually has a seasonal track record. It's a sell. In fact, if I come back up here and go back to, let's say, 16 weeks, and I scroll down, look at the number 1 stock, Fold. So here's the deal. Not only can I show you right now the hottest stocks for the next 16 weeks on your screen, completely data-driven, you could say to me, but how do we know this one may have a pretty good chance of working again? Come back up here, just go to the buy signal stocks, and we'll get rid of Fold for you. Not only am I showing you which stocks go up this time of year, the best of the best, I can also tell you which ones are on a buy based on the fundamentals, the balance sheets, the earnings, the technicals, the sentiment, and seasonality. We've just called the herd, and we're looking at only grade A beef, if you like that sort of thing. Next, how do we know which one to pick? I mean, if I had a $10,000 trading account, or even a $100,000 trading account, or maybe I have $1 million or plus, would I want to trade all of these? I mean, I can't tell you what to do. I'm not a licensed financial advisor, but you can do whatever you want. You could. But what do I do? I mean, we built the software, right? Here's one thing that I would strongly encourage you to consider. Trade something you find fun. Under Armour. I personally am not a big fan of drug stocks. Monster. Hubert talked about in his weekend video. Maybe we look at NASDAQ. Maybe we look at Intuit. And that's going out 16 weeks. If I move this back to maybe 13 weeks, who do we see? Monster. Expedia. Okay, what if I go 12 weeks or 10 weeks? I mean, you guys are getting trade ideas like crazy, right? Let's go 15 weeks. Under Armour, CERN. Pick something you like. Here's what we're gonna do. I already wrote these down. We're going to look at CERN. We're going to look at Under Armour. We're going to look at Monster. We're going to look at Expedia. Try to pick different stocks. Once I've written down maybe 3, 4, or 5 that I want to look at, I'm going to come up here and go search. I'm going to click on seasonality, and I'm going to scroll down. Right now, the S&P 500 is on your screen. I want to point something out, which is, I don't know if I did this in my webinar 2 weeks ago with Jeanette and Hubert, but if I go between now and October 4th, and this is updated every single day. So there's a question, how often do ratings change? The data is updated every night. This is not meant to be intraday traded. That's not the type of data we're looking at. This is all end of day. So if I look out right now, this is Saturday, early part of June, through October 4th, the spiders is projected to fall by 0.68%. Well, that's a whopper, and it does so 42% of the time. So what does that mean? Actually, 58% of the time the market goes higher, but the losers beat the winners. And my point is, between now and October, we're in early June, so July, August, September, and October. The next 4 months, the S&P is flat, which is why you hear the talking heads on TV say, hey, sell in May and go away. What they like to do is also instill fear in you, so you get, go check them out, get clicks and all this crap. They talk about the market crashing. The market doesn't crash. When they say that, they're absolutely lying to you. What they're forgetting is maybe different times of the year, there could be a higher tendency of the market crashing, but the data speaks and they can all hit the road. Market does not crash as a high probability over the summer. And if I move my cursor to, let's say, the middle of September, the spiders is projected to rise by 0.21%, 65% of the time. That's not really good, right? Well, now you see why having access to the best performing stocks, whether they be bullish or bearish, and I'm going to circle back and we're going to look at bearish stocks too, just like we did 2 weeks ago. And then you saw all those go down as well. I think I showed you guys probably a dozen stocks about 2 weeks ago and 3 weeks ago. Literally almost every single one, if not every single one, went exactly as seasonality said. When the market was crashing, these stocks were going up. And when the market was crashing, the worst ones were getting beaten. I mean, it was a beautiful thing. It was incredible. So what's my point? My point is, look at this dotted line. That is the probabilistic future price. That means if the stock, in this case, the S&P 500 ETF, lives up to its historical averages, guys, we're talking about less than a 1% move up or down, whether we go September or October. It's flat. And look what happens. Once we get to the end of October, November to May, the bulls play and up they go. So this is what the S&P has done, or your stock. This is what it's projected to do if the stock lives up to its historical probabilities. You with me? So let's go take some of those stocks that we just talked about. In fact, let's take a look at CERN, C-E-R-N, Cerner. This is one we looked about 2 and 3 weeks ago. I think I did about 4 different webinars with Hubert and Jeanette because you guys kept showing up in droves. You were maxing out the registration. People couldn't even get in. If I scroll down, now you look at this chart, look at the probabilistic future price side. That's the projection based on historical probabilities. You can see how it's dotted. It basically goes lower left, upper right. Okay, is that all stocks? Oh no, some, which we're going to look at together. Let's pick out a color. Let's do blue. Some go like this, and then they go like this, and that's Disney. Okay, Cerner basically just does what? It just goes straight up. Okay, but what you can see, it's sort of flat a little bit now, and then it gets a pop in July, and it sort of keeps going, and then it sort of gets flat in November. What we can do is if we take our mouse, we can actually see that over the next 7 weeks, it goes up 75% of the time, 65, 62, 65, 68, ooh, there was another 75. You can literally take any stock you want to look at, put it into financial, and see how it historically trends. And over the next 15 weeks, 75% of the time, Cerner has gone higher. And it just doesn't go higher by a little itsy bit. We're talking double digits here, 13.41%. It's literally almost a percent a week. Well, that's good to know. I guess I shouldn't be bearish on this stock. That's also the point. How many times have you guys looked at a stock? And when I say you, I'm talking about me too, before we build financial. You look at a stock and you say, it's sort of going nowhere. And then out of the blue, it just ignites and explodes higher. Or it drops like a rock, right? Well, now you know when the stocks do it. You can come in here and type them in and see exactly when those probabilities rise. The only way Cerner can do this, 75% of the time rise by 13%, it's not if you, me, Jeanette, Hubert, and our buddies are all buying the stock. We can't pull that off. The big money is pulling it off. That's the difference. Okay, that's Cerner. What if we look at Under Armour? Another stock we talked about 3 weeks ago, 2 weeks ago. And this one to me is priceless. I need to get my pen. I already brought it up. What I should have done is this, and ask you guys a question. When do you think a stock like Under Armour, who makes apparel for athletes and for regular folks, sports apparel, is going to have good and bad times of the year? Now, we already know from earlier that the market does well November to May. And the S&P 500 is made up of 500 companies. They're not equally weighted, right? They're not equally weighted. But if 80% of the market's going higher, 80% of the S&P 500 is going higher is the, estimate. But do you see what Under Armour does? Under Armour, in November, it actually goes down right through the holidays. Retail stocks actually do well September, October, November. Under Armour does the exact opposite of what most people would think. And then in January, when all the Black Friday sales are over, the markdowns, it goes on a run, and it still goes on a run right now. Again, how many times have you bought a stock or followed a stock and said, this doesn't make any sense. It's going down when it should go up, and it's going up when it should go down. Yeah, look at the seasonality. What is the big money doing with that stock? So if we come in here and look, I can go week by week, and I can see that over the next 7 weeks, Under Armour is projected to rise by 5.59%. And from a historical probability, that is all of the public data we can get our hands on through our data provider. So we're not being selective and saying, hey, only the last 5 years. And what I would encourage you to do is when you're doing your, the seasonal analysis at Financial, I would make sure you go back at least 11, 12 years to account for the 2008 and 2009 crash. Because pretty much since 2009, the market's gone straight up. And even a blind squirrel finds a nut once in a while. You just get lucky by accident. But what do these stocks do when the poop hits the fan and the market is rolling over, right? And what you're going to find is some stocks even held up during that time frame. Some stocks actually have 100% historical track records, which is just jaw-dropping, meaning they've never lost. Other stocks go up 90+% of the time. And when you start thinking about that, stocks that are 10, 20, 30 years publicly traded, and they have 90% win rates, I mean, unless Armageddon is happening, these things are just studs. They don't lose historically. All right, so that's 7 weeks. Can we find a better number? Well, I can just keep moving this mouse and say, oh, wow. If I go out 16 weeks, which is basically to the end of September, Under Armour rises by 14.38% historically. We can even tell you the price it would be at that point in time, which would be $29.62. 84% of the time, the stocks go higher. Well, what else I can do is come up here, move this cursor to 16 weeks, and then scroll down. If you want to see this actually written for you, the algorithm will just, make the print bigger. Maybe you think the print's too small on the chart. Over the next 16 weeks, Under Armour has on average historically risen by 14.4% based on 13 years of stock performance. So this stock was around when the market crashed in 08-09. Under Armour has gone higher in 11 of those 13 years, a historical probability of 84%. Could you imagine having coffee with your trading buddies tomorrow morning, 9, 10, 11 a.m., whatever you do, and they say, hey, did you find any good stocks this weekend? And then you say, I did. I found Under Armour, and I feel it can go up by 14.4%, maybe over the next, 16 weeks, with 84% historical probability. Your trading buddies might look at you and think, is that an Irish coffee you're having? Because you're being a little more weird than normal. You actually show up with the facts and you say, no, that's just what the stock does with no special input. It's just what it does. Now we know when Under Armour has the biggest chance of moving higher. And not only that, could you imagine if you would have read some kind of report out there, and we're going to look at an example. We're going to do Netflix here in a little bit, where all the media was, when I say all, I'm paraphrasing, there was so much negative news on Netflix going into year end. And you see this over and over again. There could be tons of negative news on Under Armour, right? Maybe they're going to talk about trade war baloney, all this stuff, yet the stock goes higher. So I would encourage you to put your fingers in your ear, sing your favorite song, and ignore all these talking heads that think they know what might happen here with the stock. They love to get on CNBS and talk and, look all whatever. You're actually showing up with the data. And they're just showing up with opinion. They actually have no proof of what they're talking about. They can't guarantee anything. Nobody can guarantee anything, but I can show up with facts, and that's the difference. So we looked at Cerner and we looked at Under Armour, right? Let's go to a chart. I'm going to use Thinkorswim. I saw Hema uses TradeStation. I like TradeStation too. So I don't care what brokerage firm anybody uses, TradeStation, Thinkorswim, Tastyworks, whatever it might be. But if I come up here and I type in UAA, which is Under Armour, remember there was a couple of you guys, and there might be more of you, not everybody's typing, said that you were watching me in webinars around the May. And in fact, I'm going to slide this over and I can even tell you, we did an event together with Jeanette and Hubert on the 22nd, the 24th, the 25th, and the 29th. I did 4 events in May because you guys just showed up in droves. It was nuts. Okay. Here is May. Here's the 20th, 22nd, 24th, 25th, 29th. This is right where we were. And Under Armour was on the scans as being bullish. Do you guys remember that? And look what it did. It was actually rising when we were in the webinars. It pulled back a little bit, and now it's just shot higher from 23 to almost 26. That's over a 10% move on a little rinky-dink stock. And you could say, well, how did I know? I knew because I had access to the data at Financial. If there was a window where you do not want to be short, it's when stocks are historically bullish. One person said, hey, look, there's a double top over here. I know I'm getting a little granular. Oh, look, there's a double top. In fact, if I go back 2 years on Under Armour, there's even a triple top. There's no way it's going to get through there. Remember how sometimes you talk yourself out of good trade ideas? You're like, oh, it might look good. And then you go, oh, well, maybe it can't get through. Put that away, park it somewhere, get rid of it. You knew that this was the window once we get into the end of May and in June when this stock rips. And Under Armour never sold off with the market. Remember how May was really bad for the market? Well, really bad is relative, right? It barely sold off and then it goes right back up. How about Cerner? Remember May? Here was May. If you don't know, watch. Let me just show you the S&P here. Here was the S&P in May. S&P 500 goes from 295 on the SPY to 275. That's the equivalent of 200 S&P points being shed, lost. What did Cerner do? The beginning of May, it completely bucked the trend. How many times have you saw the market go down and you said, man, if I was only in one of those other stocks, not only did I not lose my butt and the stock dropped, oh yeah, it just kept going higher and higher and higher. Then the market resumes its bullish trend here the past 4 or 5 days. And what does Cerner do? Oh, it just goes higher again. By the way, if I type in Cerner, remember we just looked at that stock? When I scroll down, we know that this is the window of when it does well. Better yet, you see this best period here in the upper left-hand part of your screen? I can take this a step further. Could you imagine if you could ask someone, the software, this is great, but can you actually show me when the absolute best period is to own the stock? Meaning when that stock typically pops the most so I can get the biggest bang for my money? Yeah, we can do that too. Just click best period. And I can show you the best 13-week period for the entire year to own Cerner. It's that green line. How about that for a 1-2 punch? We're not even in it yet. It starts showing up in July, and then it gets even more bullish in terms of a percent gain. And you can move that slider. If I scroll up a little bit, we can go from 13 weeks, we can go to 12 weeks, we can go to, and which is almost now here at the end of June, 11 weeks. I can go and tell you, well, what are the best 18 weeks to own that stock? Guess what? We're literally walking into that window right now. You can do this with Apple, you can do it with Amazon, do it with any stock you want. Even an ETF, you could do the semis, you could do the banks, the transports, even metals, which we'll look at gold here in a little bit. If I show you Cerner on this chart, just from the time we were doing these webinars, now the stock's up almost $3, but guess what? Cerner appeared even back here when the earnings report came out, and they have biases. We looked at a stock called Pod 2-3 weeks ago. Here was May. The moment the market went down, Pod goes up. Pod is now up over 10% in the month of May. We were doing the webinars, it was around 105, 106. Now it's up at 111. Some stocks just buck the trend. That's what you need to know. And you might be saying, well, these are bullish. Guys, you can do it to bearish. If you just like being a bear because you think the market's going to fall off a cliff, go search for bearish stuff. It does not matter. We were looking at Symantec. Look at, this is my point, and I'm sorry if my voice changes because I really get excited when I do these webinars because I don't know if you know my background, but I started in the markets around 2000, learning about them, just studying. And everybody kept saying to me, about fundamentals and earnings and all this stuff. And yet it never seemed to add up unless your whole time was infinity, right? Like Buffett. And stocks would mysteriously seem like they're in an uptrend. Everything looked great. And then magically they peak out and they just drop like a rock. And then you start scratching your head saying, but nothing really changed. Yeah, but the big money knows. They flow in, they flow out. Maybe the big money has inside tracks on some of this stuff. I don't know. But take Symantec, for example. Would you guys agree, if I drew that little trend line, that from pretty much when the market bottomed on the Christmas Eve massacre, right? From the Christmas Eve massacre, that was the bottom. The stock had a nice uptrend. We can all agree. Visually, right? You would say, oh, it's looking good. It's looking good. Stock went from 18 up to 24. That would be like a $180 stock going to 240. We're doing pretty well. And then in May, the stock just gets killed. What if you knew that the months of May and June are not kind to Symantec? You literally could have ridden this higher and then walked away before the collapse came. And this is the scary part. If I take you back to financial and we type in Symantec. So these aren't like obscure stocks. These are really well-known companies that you might be using their Norton antivirus right now. Guys, look at this chart. Look at this chart. Look at the dip. In fact, if you go all the way over here on the right, you'll see May down here. May marks the peak. There's the dip. There's a little bit of a rise, and then it falls off a cliff again right now. If I take you back to the chart, what happened? There's the rise, there's the dip, there's the pop, and then it falls off a cliff again. Sometimes these stocks, it's almost as if it's ESP, it's future telling, whatever you want to call it, psychic, they almost match what the chart shows. It's not our chart, it's the stock's own chart talking to us saying, guys, whatever happens this time of year, it's frowned upon. Maybe this is their weakest quarter. Some folks always want a reason for why the stocks do it. I just like money. I really don't care. When the stock is shouting from the rooftops that it's bearish, well, then why are you a bull? You literally could have traded Symantec bullish and then said, oh, by the way, May 1st, I always sell Symantec. Why? Because it usually gets taken out behind the woodshed. Oh, it did again. If we go back to financial, I told you guys I would show you bearish stocks too, right? So let's scroll up. Let's go screen. Let's go seasonality. And now I actually have bearish stocks saved, which is really neat. Once you guys pick your settings, you can come in here and hit that floppy disk and then everything, save it, give it a name. I can actually show you, you can hit this and then just give it a name, you know, hit save. Well, I already have mine saved. So I can hit that little hamburger menu, they call it, go bearish. And if I want to look for stocks that are bearish over the next 8 weeks, I can sort by percent decrease, the probability they go down, Finisar, NVIDIA, Western Digital, Taiwan Semi. Okay. NVIDIA, Western Dig, and Taiwan Semi. There's no way these things are going down, right? Oh yeah, there's May. Here's June. How about Finisar? There's May. Here's June. How about Taiwan Semi? They've already started. They've already done it. Look, this is my point. If you trade Taiwan Semi, look how it went. It went from the low 30s all the way up to 40. This was a 30–40% gain in 2 or 3 months. Yet you know, once May comes, you gotta get out of the way because the stock gave it all back. How frustrated would you be as a trader knowing that in a matter of 2 or 3 months, you made 40% of your money, you're dancing thinking this is great, and then you took a vacation and 2 weeks later, it's all given back. That's because that's when the big money leaves it. Now you know, this is literally a roadmap, a treasure map. It's X marks the spot of how these stocks trade. And that's the beauty of it. I'm not telling you this is what they do. The stocks are telling you what they do. If I take and show you, search seasonality again, and we type in Taiwan Semi, TSM, and we look at May. Do you guys see that peak in May? It's right there. Look, there's already about a 3–4% drop, and it just keeps going until July. How about this? Over the next 9 weeks, Taiwan Semi falls by 9.88%, 71% of the time. This stock might have the best fundamentals on the planet, but I gotta tell you something, good fundamentals or not, do you really wanna go fight billion-dollar hedge funds when this is when they're dumping? I know you can stand in the street and try not to get run over on the freeway in California, but do you really want to do it? Probably not. You now know when not to be bullish. Look at January. Remember we just looked at Taiwan Semi and that stock had an amazing run? It sure did. And you knew to walk away before this happened, right? How about Xilinx? I think this one is really it's just gonna make your jaw drop. This is Xilinx XLNX. There is one period of time, you see that? When this stock typically rips throughout the whole year. By the way, this is 52 weeks. There's a lot of chop, 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 chop. January, shotgun. March, it starts dipping. It actually drops, but then it goes nowhere. You can see that dip. How floored would you be if I took you to a chart of Xilinx right now and it actually matched this? And I know this line looks like it's steep, but look at the numbers on the right-hand side. It goes from 3% to 21%. I'm not talking about a stock going 7% in 7 weeks. This little puppy, 18% in about 3 months. It's a rock star. All right. Ready? XL. Oh, I gotta get rid of this, hang on. You must be kidding, right? You must be kidding. Here's January. There's the explosion. Do you see these little dollar signs on Thinkorswim? Those are earnings reports. You will, this is going to sound sort of maybe arrogant, but I don't mean it that way, but you will come to understand, as the data has shown me, and thousands of people who are using financial, that earnings reports have seasonal biases. We've been taught or schooled on, if earnings are good, stocks go up. If earnings are bad, stocks go down. That's not the case. It's only if the big money wants it so. And look at the volume on that earnings report. Black volume is up days, red volume is down days. There's nothing proprietary about what I'm showing you. The stock, we looked at the chart at Financial and it told us what was happening. There goes Xilinx. Look when it topped. Did you see this? It was right at the end of April and May. This was the top right there. If I go back to Financial, let me go ahead and clear everything. There's March, April's dropping, and then it's just choppy. Look at January, right there. There's the run. Could you imagine if you wanted to trade Xilinx or had Xilinx shares? You now know that there is only one part of the year where you want to be super bullish, and then to sidestep the nonsense. So you could literally say, I sort of caught a bit at the bottom and then I sort of sold at the top, and I ignored Xilinx the other 9 months. You can now be so laser surgical in how we consider applying our capital. We're no longer holding a stock for a whole year when it really doesn't do that much. We just want to pick out the best parts of the meat, the best parts of the chart, the best parts of the year. And I did a webinar for Financial in January. And I said, what's interesting about this, guys? Xilinx really never got killed. Like, some stocks were down 30, 40% in December and November. There was bloodshed. And Xilinx really didn't pop that much. And I said, we got ahead of earnings. And I record every webinar I do. And I said, you know what? Just wait. Proof's going to be in the pudding. How about on paper, fake money? We just go buy one long call. Because we've always been told earnings are supposed to be crapshoots. So if I go on January 18th, and this is one really neat feature about Thinkorswim, so I can go to January using the Analyze tab, take the 18th on Xilinx. Let's just say I go out to March. The stock was at 93, and I just try to teach an at-the-money call, so we're not buying insane amounts of time, a couple months. It was 465. What that means is, to own one long call, it costs 465 bucks. If you want to buy 100 shares, it's $9 grand. You just buy 100 shares, right? Well, look what happened. 2 days later, it dropped. Let me zoom in. 2 days later, it dropped, and then it went nuts. On the 24th was earnings. That option, just 6 days later after we bought it, that $95 call is now worth $12.45. It's almost a triple. 465 bucks became $12.45. And if I take you to March 1st, okay, so middle of January to March 1st, I hope you're sitting down for this one. Now that $95 call is worth $30.80. Every 465 bucks turned into $3 grand. It's like, oh my God, Ron must be a genius. He must have some special sauce that he uses. I love Heinz ketchup. I think Hunt's is pure imitation. I have no secret sauce. We went to Financial. We pulled up a chart. We knew exactly when this little sucker, if it was going to run, the exact period of time it was going to run. No proprietary anything. Right there it was in front of our eyes. And it went and did it again. And this just keeps happening. When I send out emails and I have special events at Financial, you know what my subject line is? It just keeps working, ... It's incredible. It's absolutely incredible that this stuff just keeps happening. Okay, I've shown you some recent examples. Here's what I want to do now. If you can type in the chat box, does anybody here trade Adobe or Netflix? Because I want to show you stocks that do not go with the market. Go ahead and type in Adobe or Netflix or both, because I want to speak to you guys. And you're, oh, hey, Elton, I remember your name. Hey, Robert M. Okay, so here we go. We got both Adobe, Netflix. Robert's like, got Berwin, Netflix. That's okay. Nothing ever works all the time, right? This is not a political program, so we're going to leave the whole president thing out of it, but I want to talk about the election. I want to show you the S&P 500. Because May through November, the market is really bullish. I'm sorry, November through May, the market's really bullish. November and December, the market's really bullish too, right? November, December, arguably the best 2 months of the year. I'm going to take you to 2016 when the president was elected. Okay? Here was the sell-off into the election. We probably all remember that if we were trading at that time. Then the new president was elected. And overnight, I think it was Carl Icahn said, the moment he saw the new president, he bought $1 billion or multiple $1 billion worth of stock in the overnight market. The stock market gapped up. This is the S&P 500 ETF. And then it just went nuts. So it went from about 200 to 217. If you're trading the SPX, the actual S&P index, that's going from 2,000 to 2,170. That is an incredible move in 2 months. Let me also say that the S&P 500 is 500 companies. The old adage is 80% of the stocks follow the major market, 8 out of 10. How many of us are going to raise our hands right now and say, I heard that, yet somehow I always manage to pick the 2 that don't move? I'm going to raise my hand because my trading wasn't perfect and it'll never be perfect. But somehow I'm the guy that manages to find the one stock that doesn't go up with the whole market. The whole freaking market could be green, right? And I got the one that was red. With the power of financial, we can start to change that. We can now trade with actual data instead of guessing and wondering which 8 out of 10 might go higher. It builds your confidence. So one more time, look at the screen. President's elected, market goes bonkers. Even a blind squirrel could have found the nut, right? It's like pin the tail on the donkey with no blindfold. Except you decided you wanted to trade Netflix. All right, let's go look. So right here's the election in the center of the screen. So your Netflix stock the day before the election was at 122.50, and it goes to 125. Yes, we got it, right? We picked that one that goes higher. And then Netflix went down. Meanwhile, the market is ripping higher like everything's going up, except our stock. And then it sort of goes nowhere, and it goes up, and it gets to the end of the year and goes nowhere. What do you do in that situation? You manage to pick one stock, Netflix of all things, and you know where Netflix is now if you follow it, and you're like, man, why is it always happening to me? Am I like possessed with like a negative spirit or something? Watching too much Travel Channel. How do I do this? And the answer is, it wasn't time. Timing is everything. Netflix, and I'm going to show you this. If I were to type in Netflix, add financial, and scroll down, what do you guys see? Basically, January to May, this stock is an absolute rock star. Do you want to know when it's not a rock star? Right there. November and December. It does nothing. Oh dear. So if we go back to the chart, we actually knew that was not the stock to buy. Do you see how this is playing out? It's even during an election massive rally. Your stock did exactly what the seasonality said. The big money doesn't buy it in the last 2 months of the year. They're buying seemingly everything else. So what do you do at the end of the year? You sell it and you say, I'm going to be a better trader, blah, blah, blah. It didn't go anywhere. I'm going to get rid of it. I'm going to go buy something else that goes higher. Yeah. Once January comes, look what happened. The moment the calendar turned, the stock jumps almost 10 bucks, 8 bucks, pauses, then it jumps another 15, pauses, and then it goes higher. Look at the volume bars. The volume bars start spiking. More volume can push stocks up or down. The moment January hit, there goes the volume. All right, well, that was 2016. Come on, Ron, show me something sooner. All right, if you really want me to. Here is 2017. Here's November, the stock comes down, and there's December, the stock goes nowhere. Watch what happens when January comes. Are you kidding me? The moment the calendar goes to January, the stock goes from around 200. Before earnings is at 225. It's already up 20%. On earnings, it jumps to another 10%. Then it jumps another 10%. Then it pulls back, and then it goes to 3.25. Wouldn't it have been nice to know that Netflix has bad November, Decembers or boring, but January to March, it's a rock star? These call options, first of all, the stock itself went up 50%, but you would have known to expect that just because the stock told you, it waved the flag, it popped up on your screen. Do you know what the options did? They were up multiple 100%. In fact, at one point, I think the number was over 500% at one point, if I recall correctly. A 5Xer, a 6Xer. Can you imagine? And you knew that, did you know it was going to go up by that much? Historically, no. But when you put yourself in a good position, because that's typically what the stock does, AKA go higher, you just sit back and enjoy the ride. And this is how the exits work. I have to watch my time today. I can't go as long as I normally do. The red line is the 20-day exponential moving average. It's not unique to me. It's just something common in the market. It's free on any platform. As long as the stock stays above it, we're in the trade, we're in the trade, we're in the trade. When the stock gets below it, you're out of the trade. So you can be a doctor, lawyer, nurse, school bus driver, landscaper. You could be in Singapore sleeping when the market is open. You could be here in the US and maybe you work night shift and you have to sleep during the day. Here's the exit system. Can you tell me when it's below the red line? I think an 8-year-old can do it. That's the point. Now you know to get out and you're done. And you just ride the pony the whole way. All right, well, that was 2017 and 2018. So how about this past year? And this is key. Let me just watch my time here. This is key. Okay, I have to go faster here. For those of you that said you trade Netflix, Robert, MRKI, Shoba, Faris, all you folks, do you remember how bad the news was during the months of November and December on Netflix? I actually turned on CNBS. I was reading articles at various places, whether it's Zero Hedge, TheStreet.com, and I could not believe all the negative news on Netflix. So I held a members webinar just 6 months ago, and I said, gang, this could create an incredible buying opportunity. We know that typically in November and December, Netflix goes nowhere. And because the market's selling off, it's caught in the downdraft. But we all know what? We know January 1st. Get ready. Look at all the volume coming in. January 1st, pop goes the weasel, stock goes from around 270 up to 350. Oh, but that took a while. Man, it took 2 weeks. Wouldn't that have been nice to make almost 300% of your money with an at-the-money call option? 300% using an at-the-money call option. Like taking candy from a baby. And then you're out when it gets below the red line. Not bad for 2 months worth of work when you literally saw it coming. It's a treasure map. How about Adobe? Adobe during the election. Adobe's been publicly traded 30 plus years, by the way. So for Adobe to have this incredible seasonal bias is almost mind-blowing. There's Adobe, market's ripping higher for the election, and your stock just dropped 7-8%. But then you see the dollar sign. That's earnings, according to Thinkorswim. We've always been taught earnings matter, earnings matter. The stock gaps up and closes lower. And at the end of the year, you realize that you bought the stock around 108 and it's now down around 103. So let's say you're down 5%. One more time, what do we do as traders when that happens? Oh man, I gotta do better. I gotta buy more people's crap. I gotta spend more time away from my family on the weekends. I just gotta study harder. We all need income. But what if you knew that Adobe is just like Netflix? And there's 2 months out of the year, especially the end of the year when the market's going higher, you don't touch these two stocks. Remember, we were told that earnings matter. The stock dropped. Well, that must have been a bad report, right? Oh, guidance must have been in the crapper. Okay, Adobe folks, Elton, Kadarsha, you ready? And everybody else? There goes Adobe. This stock went from 105 all the way up into 130 and upper 40s. You tell me what on God's earth changed between that earnings report right there. Thinkorswim tells you on December 15th, 15 more days, the stock dropped. You switch that calendar to when the big money starts coming in and look at the volume bars, and then up it goes. The stock did not rally with the president. It did not rally with the S&P 500. It did not rally during the strongest time of the year. It wasn't its time. January. This call was also up over 200+%. All you have to do is come home and say, is it above or below the red line? Above or below the red line? Oh, you're out. Well, that was that year. Surely that wouldn't happen again. You ready? This is 2017, just like Netflix, November, December. Look what happens come January. There it goes, a little pullback, and then it goes right back up. Now it's at 240. We were just talking about the stock being in the 100. How about this past year? Here's the sell-off in December. Flip the chart to January, and the stock just starts running again. Guys, it just keeps working. You can't be shocked. You're no longer the deer in the headlights. You can see when not to and avoid the crash and actually try to hop on when it's bullish. I mean, gold's another great example. Here's a 5-year chart of gold. I actually have to go back 10 years to show you this because it's just insane. Here's 2013. I need to write. Let me show you this. Here's a pen. Ready? 2013, gold was crashing right into the end of the year. So gold typically has a bad Q3, Q4, but January and February, stock went from 110 to 130. You get, or 15 to 30. You get a $15 move on an ETF that's around $100. That's like 10+%. These options can move triple digits. All right, 2014, sell off into the end of the year. Oh, look at 15. You see the pop? January, February. How about 2015? Oh, sell off into the end of the year. How about January, February? Here we go from around almost 100 right up to 120. That's a 20% move. How about 2016? Oh my God, this is like too easy. 17, there we go. 2018, there's a dip. 2019, or spring of 2018, up. How about last year? It actually fell apart in the summer, but look what happened in 19. 6 for 6, gang, on gold. I'm a huge gold bull. I think gold can go to 5,000, 10,000 an ounce. You might think I'm crazy. That's an opinion. Doesn't matter when it comes to my trading. There is 1-2 month window I want to trade gold, January, February, as a bull, and I might consider being bearish in Q3, Q4. And if I take you to financial again, and I show you GLD, and you ask me when is the best period to own gold? What do you know? It's January and February for the whole year. Biggest percent move. And guys, this isn't my secret sauce. These are the stocks that are screaming to us, saying, hey, look at me, go screen, go seasonality, find the best bearish stocks for the week ahead. Come up here, flip it to bullish, find the bullish stocks for the weeks ahead. Then you can go put them in your watch list. And you can actually move the slider, put all your stocks in here and say, hey, how are my stocks performing for the next 3 months? I can tell you if they're on a buy rating, use our algorithm, and I can also show you the seasonality. You no longer are flying blind. You have the dang roadmap right in front of you to say, oh, holy moly, I better avoid Apple in the beginning of September, because you know what? When I type in Apple, and I don't know if you guys know this or not, but if you type in Apple and you look at September, that's when they have that product announcement. Look what happens in September on Apple. There's the dip. This stock dips during that period of time almost every year. It's the treasure map. So here's what I'm going to do. Instead of trading blind, that should all end today. It should have ended 2 weeks and 3 weeks ago when I did the webinars with Hubert and Jeanette. This is your last chance. When Hubert and Jeanette originally asked me to come in and do some webinars for you guys because they were blown away when I showed them the software, they said, hey, we want your best deal ever. And I wasn't coming back. This was not scheduled. I was a last minute fill-in, and I was so grateful that they asked me to come back. They said, we want the best deal for your people. And I said, okay, well, I mean, we sell it for $17.88 a year. And if you think I'm full of baloney, I am not. If you go to financial.com right now and you try to buy a whole year at Financial, you either pay $159 a month or you agree to a 1-year contract of $149. Guys, that's $1,788. And we got people paying it because the value of seeing what stocks do ahead of time, the money that's being saved is incredible. In fact, I got people writing testimonials without, I don't have to even ask for them. They're like, oh my God, AMD. We avoided the AMD debacle. AMD has a great early summer, a bad late summer. A perfect example of that is this. If I show you this, if anybody trades AMD and you were in August and you watched this stock double in 2 months, you were probably jumping for joy. And then 2 months later, you gave it all back and you're pulling your hair out thinking you're the worst trader in the world. These are the type of emails I get. So paying $17.88, to me, it's a no-brainer. But Hubert and Jeanette said, we want your best price. I said, well, it's $497 a year. That's like the lowest I go anymore. The prices have gone up. And I said, and that's my super sale. And they said, well, you know how Jeanette talks, right? Jeanette talks nice. And Hubert's like, but Ron, Hubert's funny. I like Hubert. But he always puts that N on the end, right? But Ron, we want the mother of all deals. And I was like, geez, Hubert and Jeanette, you guys drive a hard bargain. Okay, I'll tell you what. I told all my people it was never coming back. And I said, I'll do it for you guys, but it's got to go away. So I'm back one more time, and this little sucker is gone. It is not going away. I only offered this the holidays, and then I shut it down because it is too cheap. So this really is, and if you wonder, it really, really, really is the best deal you're ever going to see. There's one catch. I'm going to do 50 units. When they're gone, then it's just going to go to sold out because I don't want to keep selling it at this price because it is too cheap. So here's the deal. It's financial.com/thirsty. You're going to get $397 for a whole year. Just links in the bottom right-hand corner. And here's where it gets even better. Jeanette said to me, well, can't we make this that they always get this price? I'm like, for God's sakes, okay. I'm like, okay, but they can't get any better than this. So $397 a year, and then you're grandfathered in at this price forevermore. One of my favorite words to use. So $397 a year, you'll get platinum access, everything I showed you, plus there's going to be a ton more. I'll go through and show you guys some other parts of the site here in a little bit. Maybe I'll stay on for like 10 minutes, and then I'm going to wrap it up. But $397, we sold out every time we did one of these events with Hubert and Jeanette. I'm bringing it back because they asked me to come one more time. This is it. There's no webinar on Monday. There's none on Tuesday. There's none on Wednesday. This is it. $397 for a whole year. $33.08 a month. Here's the deal. I truly believe this can help every single trader. And if I did a good job today, you should agree with me. You should say that, oh my God, we now know to avoid Adobe and Netflix in November and December when seemingly everything goes up. But man, oh man, come January, those little suckers are rocket ships. Are you kidding me? Or gold 2 months out of the year. Xilinx. We didn't even have time to look at the pizza stocks. Papa John's and Domino's, both make pizza. We can argue it's good or it's bad, but we know we're going to see their ads all over the big game, Super Bowl time, but only Domino's goes up. You can look on that on your own. Papa John's actually goes sideways or drops. Could you imagine thinking, I'm going to pick a pizza stock, but only one goes higher and the other one doesn't? This is the ultimate this versus that tiebreaker. You're literally taking the blinders off. It's almost like you're behind the curtain in the market saying, what are these big funds doing? You now know. So it's financial.com/thirsty. And here's what I'm going to do. Let me hit reply to this. And why can't I hit reply? Oh, there it is. That's why. Give me 1 second. I'm going to send you guys the link. So you go to Financial, FINANCHILL.com, and then you type in Thirsty. I love that name, TradeThirsty. So Shobha, thank you so much for saying that. I just sent the link to you guys. I'm also going to put it in the chat box as well. So we're going to go financial.com/thirsty. Oh, and I didn't send it to everybody. Let me try this again. FINANCHILL.com/thirsty. So normally I have my team with me, but they are off. One's at a wedding and one is out with their kids. So it is just me here today. So I'm going to try to keep an eye on the counter. Okay. And let you guys know where we're sitting. But my guess is in about 10 or 15 minutes, we are going to be done. All right, if you have questions, please do ask. I'm just going to break these boxes out. Again, it's financial.com/thirsty. So let's see what we got here. So Shobha says that they've already paid for their membership. That's awesome. I love those comments. What else? Kesha, you want to know how to sign up? I'm trying to paraphrase your name. All you're going to do is go to this link right here at the bottom of your screen. I'm going to circle it. Or I can put the arrow right here, right here, right here, right here. I'll put the highlighter. I will circle that little bugger, and then you can sign up. And you're going to get it for $397 for a whole year. Oh, if there's one other thing, Hubert and Jeanette said, so $397 is the best. I said, yes, it is. They said, but is there anything that would ever be better? I said, well, I had run $297 for a second year once, and they said, well, we want that too. I'm like, oh my God, okay. So just copy and paste that into your browser. Don't click it, copy and paste it into your browser. Let me just send it to everybody again. www.financial.com/thirsty. There you go. Now it should be clickable. There you go. So I just populated it on the screen for us. So it does work. Okay, now it's a clickable link. All right, let's see what other kind of questions do we have. Somebody wrote, kill the squirrel. That's funny. Do you hold trades during earnings season when seasonality is bullish from Shobha? You can, yes. Again, I can't tell you what to do. I'm not a licensed financial advisor, but what I would strongly urge you to do, consider trading in a paper trading account. And that way you can say, oh my goodness, this just keeps working. And you're going to absolutely be floored. Guys, I just showed you 3 stocks that we talked about. Cerner, Under Armour, and Pod. We talked about those same trade ideas when I was with Hubert and Jeanette 2 or 3 weeks ago. The same ones. And when you look at those charts, what do you see? It's almost like, well, I hear this works. I wonder if it really does. Were you guys just with me 2 or 3 weeks ago? Because if I type in Under Armour, what happened? Stock's up 10%. I type in Cerner. What happened to Cerner? It's up like $3. What happened to Pod? It's up $5, $6, right? There was another one we talked about, which Hubert talked about in this weekend's video, which was Monster. Monster already had a bullish earnings report. Monster has been in the seasonal bullish window. Monster was on the screener that we looked at the beginning of class or the session together. So the fact that we saw an earnings gap up and now it's starting to break out, it's not a shock because it was also seasonally bullish. You know what you knew to? You know what you knew to do? Not be bearish. You do not want to be bearish on these stocks when they start having 70, 80, 90% track records of moving higher. And then conversely, my goodness, you do not want to be bullish on stocks that are bearish. Why would you do that? You don't have the odds with you. I'd rather swim with the current, with the funds instead of against them. Does that make sense? All right, so I am showing right now, I'm gonna have to do a verbal. We are down to 31 left, so we're almost halfway. So welcome aboard. I'm not gonna be able to do all this, but I will do my darndest. Welcome aboard, John M. Welcome aboard for Charles R. I was just down in Fort Lauderdale on vacation a couple weeks ago. Welcome, Edgar, out in Cali. Welcome, Jill, also in Cali. All right, welcome, Lawrence. Hey, nice to see you, Lawrence. I think I remember that name. We got you for 2. Like I said, I won't be able to keep up with everybody. Mark K, we got you down there in Georgia. Steve, we got, oh, Steve, you're in Pottstown? I'm in Allentown. Actually, I'm in Catasauqua. We're not far apart. Byron, we got you as well. Denny, we got you. All right. Jordan, we got you. Samantha, we got you. Ricardo, we got you. Richard, we have you. And I see a bunch of you guys are taking the second year. Here's the thing. You can actually grab, there's going to be a pop-up window. So please, after you do the 397, it's a pop-up window. It's the only time you're going to see an ability to grab a second year at 297 right now. It was a test that we did. Jeanette and Hubert asked me to bring it back, so I did for these events. So not only can you get 1 year at 397, you can grab year 2 at 297, and then every year thereafter, you'll be grandfathered in at 397. It was just like a super duper promotion we ran, and you're never going to see it again. All right, so Keshav, let's do this. I'll give you my email address here privately, and then you can email me, and then I will work with you, and I'll make sure I send it. I'll make sure I get one for you as well. All right, let me check now what's going on. All right, now we are down to 24. So now we're under the halfway mark. More folks, welcome. Lars, nice to see you again. I'm just really good with names. So I remember some of these names. I'm also part of Market Tamer. I'm part of 2 companies. So some of you guys know me from there. All right, what do we got here? David, we got you out there in Cali. All right, awesome. Wayne, we got you also down there in the great state of Florida. Where are the folks from Texas? I love saying the great state of Texas. If I ever moved, I'm coming to Texas. Not because of the Cowboys, because I'm an Eagles fan. I'm just not a Cowboys person. But I love Texas. And I love brisket. Anyway, let's keep going. Faris, can I do this Monday? Not if we sell out now. If we end up having something available, I think TradeThirsty sends out the recording. When we hit 50 and the page goes sold out, that's when you're going to know it's over. It's either going to stay sold out or it just won't even take the money. But here's the link again. It's financial.com/thirsty. In honor of TradeThirsty, we made a special link just for them. Let me just move this over. All right, what else do we got here in terms of questions? So many. Look at here. It says I want the deal for tuna, but it won't move. Okay, so Kesha or Keshav, please email me at that email address I gave you, and I'll make sure we help you, okay? Oh, Jill, you remember me too. Okay, I remember you too, Jill. Can you type in ETFs? You can. You can do SMH, XLF, IYT. If you guys do currencies, it's not designed for futures and forex, but if you think about the euro, you can do FXE, right? Foxtrot, X-ray, Echo. You can do Unicorn, Papa for UUP for the US dollar. You can do XFA for the Aussie dollar, FXC for our friends up north in Canada. We can do XFF for the Swiss franc. You can do that too. All right, welcome aboard, Janet. Also in Cali. You've got a lot of Cali folks here. That's great. George in the great state of Texas. All right, George, we got you. Thank you. I can at least say it. Balraj, we got you too out there in the center part of the country. Fantastic. All right, we are now down, and there's more. Stanley P, we got you in the left coast. Robert S, we got you up north. I think that's caribou country, or is it moose up there in Maine? I forget which. I think it's caribou. Shannon, we got you. Awesome. David, we got you. David P, sorry, there's a couple Davids. And Richard F, we got you down there in Florida, even though it sounds like a California city. That's interesting. All right, what else do we got? Do you see mine, Aaron? Aaron, I'm by myself today. I don't know that I said your name. So Aaron, let me just do this. Here's what's going to happen. When you guys join, within about, it's usually like 3 minutes, but give it 10 minutes. You just never know. You should be receiving an email from, it'll say Ron at Financial. It might say customer support, but it's going to have your login credentials. And someone asked, are there tutorials? And Jill, I'm so sorry, I missed your question. There are tutorials. I'm going to email you in the second email 2 recent recordings that I did, plus there's going to be a how-to video. And then when you go to our site, which I'm in the process of even redoing them, if you click how it works in the upper right-hand corner, wherever you are on the web page, if it says how it works, there's little videos too. It just depends on where you are. We have not even talked about the covered call screener you guys get, how you can search for stock score, how we can actually send you trade ideas via the newsletters if you want some trade ideas. We don't follow the trade ideas to the end. That's not what we're about. This is a software. But if you want us to suggest things for you, we're happy to do that. So you get a covered call newsletter for covered call trade ideas. You get a seasonality newsletter. Jacqueline C in the great state of Texas. We got you too. If I keep saying every state, does that mean everyone's going to buy? I don't know. All right, we are now down to lucky number 15, 14. Wait. Todd S, we got you. Anil, I can't say your last name. D, we have you from overseas. We got you. Travis T, we got you. Earl M, we got you. I think that is now, I think we're down to 14. So guys, this really is it. There are no follow-up webinars for Jeanette Hubert and me. This was, like I said, this was last minute. When they asked me if I'd want to be part of it, I said absolutely, because you guys have been amazing. I don't know what it is on what Hubert and Jeanette built at TradeThirsty, but it seems to be an amazing community. And you guys, I guess, wrote in saying you liked the webinar I did. So they invited me back, which is great. I know them a long time, and they're 2 great people. So when they ask, I jump. Ron, after years using Financial today, I learned more in a little over an hour. Hey, thanks, Elton. I really appreciate that. Kesha, did I get your email? Because I'm by myself, let me see. Just see if I can do this. I'm going to try. So I apologize for the breaks in my chatting. I'm going to try to bring up the email on my phone. Yes, I do. Keshav, gotcha. So when I'm done here, I will email you. And Scott P, I got your email too. And one person is, all right. Okay, Peter I, we have you from out in the Southwest. Morris C, we have you from down south too. Lots of Florida folks. I'm going to say it's California and Florida that are leading the pack right now. All right. Okay, if you type in the wrong email address and you don't get the welcome credentials within like 15 minutes, send me an email. So Jill, you have my email address, but Jill, I'll just give it to you privately here. Hang on. Oops. Mom, get out of there. and I can always check that for you. It's just me today, so as soon as I'm done here, I will jump out and I'll be answering them myself. Shobha, yes, if you send Shobha, if I'm saying your name right, you can send me an email and I'll help you with that. Second year. Give me 1 second. Just trying to help some folks with personal questions. So everything today, you are getting platinum access, which is what you saw on the webpage. I have not even shown you this yet, which is you're going to get seasonality search where you guys get to type in your own stocks. Now, here's the thing for seasonality. People want to do seasonality with like Facebook, Twilio, and Twitter, all the twit heads out there. You can't do it. The companies have only been public a couple years. I can show you the data, but unless that company is at least publicly traded for 5 years, I actually hide it because I don't want you to look at it because I think you're going to get a false sense of security. You're going to think from a confidence perspective it's good when actually it's not. Frankly, when I do my own searches, I want 10 years, 12 years minimum. I need to see this repeating. Some people say that, well, if these stocks have been out there for 20, 30 years, it has to be a flat line. There can be no bias. But I've completely proved all that to be wrong. You saw on the charts how there's ebbs and flows where it's just almost like a crystal ball, how these stocks trade throughout the year. Some stocks, yeah, they're sort of going to be flat. But I gave you big names like Netflix, Adobe, Disney, Under Armour, Gold, for heaven's sakes, Domino's Pizza, Xilinx, Cerner, Expedia. Oh, by the way, I want to send you guys home with Expedia. I forgot about this. All right, we are now down to 8. Oh, no, 9. Wait, hang on. I got my phone here and it just refreshed. So checking on my phone, yes, it is 9. So we're down to 10 digits. We also got you. This makes 9. So Deanna, we got you also from Cali. Welcome aboard. Again, you guys get your login credentials within probably a few minutes, but definitely within 15. So single digits. But here's the thing. Expedia was a stock we watched. Do you guys remember this? We were watching it in May. This was also one of the stocks I told you guys, right? It was coming down. And I said to you guys in that webinar, so this one isn't working. But you know what? Expedia was on a sell when we looked at that. And what I mean by that is this. Hang on. I want to show you so you understand. We went screen, we went seasonality, and we got to find Expedia. Here it is, right here. When we looked at Expedia about 3 weeks ago, it was a bullish stock for the next couple, going out 12 weeks. And I said to you, but it's not on a buy. It's on a sell. Well, look what happened now. We now see it's on a buy and the stock's starting to run. All it did was pause and now it's exploding. And there you go. You can actually just wait for the buy signal to appear on your screener if you want. That's why I said the software can actually pick the best of the best out. All right, we are now down to 8. Monica F., welcome aboard. From the northern states, North Dakota. Nice to have you. All right, let me read some questions again. So there's 8 left. I'm staying on longer because you guys keep asking questions. Right now there's 8. If you've seen this before, you know it's the cheapest it's ever been. The stocks I talked to you guys about three weeks ago and 2 weeks ago, if they all would have lost, you probably wouldn't even be listening to me. I mean, and it shouldn't even be like that because, hey, some will work, some won't, right? But they all worked. Even when the market was going down, they were going higher, or at least holding their own. I mean, that's just incredible. Sarah, do I have you? Sarah, if I did not call your name, I'm going to say no. So this is what we're going to do. I'm going to send you a private little response here with my email address because it's just me that's working. Everybody is off for the weekend. It was a last minute fill in for me. Sarah, if you send me that email, I'll confirm with you as soon as I'm done, okay? My order is not going through. Okay, Sally, I said Sarah, I'm sorry. It's Sally. or it's Sarah. Either one. Sally, Sarah. Maybe it's two names. But I do apologize if I said your name wrong. Yep, Dennis, you are most welcome. Byron, end up in your spam box. Oh gosh, here's the thing. If you guys have a Yahoo, AOL, or Verizon, you got to check your spam folder. Gmail, Microsoft, they put our emails in your inbox. So does some of the other ones like Frontier. But anything to do with Microsoft or Verizon, these little turkeys, I don't know why they do it, but they throw our emails in spam most of the time. All right, hey, Jurgen, you're going to have to email me, okay? Here's an email address. If you just send me an email, I will respond today yet, I promise. Okay, Jill H, please send me an email. All right, let me check. What do we have? We had 8. We are down now to 5. Welcome, Rajesh B. Looks like Rajesh is overseas. I think that is England. Welcome aboard, Rajesh. George N, we got you from down in the Carolinas, South to be specific. And Mickey, okay, Mickey E, we got you too. I'm sure I saw that right. 5. Guys, this is it. I gotta go. I got plans. I gotta run. I figured we were gonna send sell out. Looks like we're going to do it again. That's going to be 5 for 5. That's never happened in such a tight span. So thank you to Jeanette, and thank you to Hubert, and thank to you guys. Thanks so much for staying on for me. You guys were at it. I think Jeanette's in Alabama, which is why she's an Auburn fan. But yeah, oh yeah, just let Jeanette know. Always say go Tigers to Jeanette. She loves that. And then just tell her I said it, and then I'll get an email. I'll probably get punched in Vegas when I see her again too. But anyway, you guys been on since I think 9 a.m. Eastern. I'm on the East Coast. I live near Allentown, right by the airport. It's a long day, and thank you for staying with me. I really appreciate it. These are awesome events when they put them on, so I'd highly encourage you guys to attend them whenever you get the chance, because they bring everybody in and they want to hear our best trading ideas, our best trading indicators, which is what today was about. And my favorite indicator is right what you're looking at. It is financial. So you're going to get access to seasonality. You can search stock by stock. You can screen. You can search for stock score, which is our proprietary algorithm. Look for stocks that just triggered buys, just triggered sells. I mean, one thing I didn't show you was this. If you actually go search and stock score, and you guys type in like something like Starbucks. I love Starbucks. I don't like the CEO, but I like the drinks. You can take this slider out and you can actually see when our algorithm gives a proprietary buy or sell for the whole year. So if you're a trader, a long-term trader, and you just do stocks, not options, or even options, but some stocks have lots of signals throughout the year. Some like Starbucks don't. You literally can see when the bulls are in control, when the bears are in control. And this is the stock score algorithm down here. So you get that too. You're getting the whole shebang. Value investor stocks, like I said, one of our partners work at a hedge fund. We know exactly what these hedge funds are looking at. So we built that out too. Newsletters will send you some trade ideas, watch lists, the best ever deal, financial.com/Thursday. And you can get $397 for a year. So Rajesh, cheers. Shobha, cheers. There's another question here about something personal. All right, so Sarah, I got you. Dennis, I got you. Byron, I got you. Jill, Rajesh. Who said? Somebody said they needed my email. Here it is. Let me do one more. Send privately. Check. And somebody said thank you. Who was that? Sarah. Okay, I'm okay now. My purchase went through. Oh, fantastic. So Sally, Sarah, you are okay. That is great. All right, last chance, gang. I'm gonna check my phone. We're probably down to 2 or 3 now. Oh, I think we are. Here they are. Who is this? So it's 2 years for Donna S. up there in Massachusetts. Welcome. We got 2. Oh, Sarah, I got you. Sarah, are you in SF? In San Francisco? If you are, then I gotcha. And it looks like you got 2 years. That is the best deal. If you guys ended up buying one and you're like, oh crap, you hit the X on the pop-up, then you got to email me. Reply to the email I sent you. I'll do the 297 extension for today, but that's it. I just don't want to keep selling it at these prices because it's worth so much more. All right, more questions. Okay, and Marv, we got you. Cheers and thank you. All right, I gotta stop. I really have to run. I gotta get to dinner, have plans with some family. Thanks again. Again, thank you, Jeanette. Thank you, Hubert. Thank you for everybody at TradeThirsty. Thanks to all the presenters today. I hope you enjoyed it. So if you did, just let Jeanette and Hubert know. I know when she was on with Hema, maybe she was asking, just let them know that you liked it. If it went too long, I'm sorry. But generally when I get going here, I just don't stop talking because I get so excited about showing everybody that trading doesn't need to be that hard. I love to trade, but gosh, I do not want to sit in front of my computer all day. I want to take my wife out to lunch. I want to meet my friends. I want to go fish, whatever I want to do. And then I can just look at the computer at night. So I don't watch the market all day because I got other stuff I want to do. And I think this style of trading allows a lot of traders that opportunity, where it's sort of some freedom. You get your time back. You exactly know which stocks are set to soar and crash now instead of trying to figure all this out on your own. Why not use the stock's own history, its own DNA as your guide for new trade ideas? So again, financial.com/thirsty. It's been great to have you guys with us. If you have any questions, those of you that jumped in, just reply back to that email and I'll be happy to help you. Best wishes. Happy summer. Have a great day. And Jeanette and Hubert, thanks again for having me. Take care, everyone. Bye-bye.